This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome to your daily dose of daily market wisdom with master trader Nick Santiago. And I'm Kerry Lutz. Today is June 16th, 2020, and this is show number 56. And Nick, hey, we've got a couple of questions that have come in, and probably should address them. Number one, one of our YouTube viewers asked what happened to McDonald's because we didn't mention it yesterday, and your response?
Well, McDonald's, I took first half profit. I'm still holding the second half. I still believe this thing, it already went above 200, but I didn't take profits there because I think it could go even higher. So I'm still in the trade, and right now the stock's trading at around 193, 192.90 to be exact. And it's up, pretty nicely on the session. But the reality of it is, I let the second half run to target. I don't look to, I take these trades, I set them and forget them. And the stop has been moved to break even. So if we do come down and get stopped out break even, we've made money on the first half position because we did take half the trade off. But I'm letting the second half run. So I'm still in McDonald's. I still like the chart. There's nothing wrong there. It should ultimately go higher as well.
All right. And then number two, this is from a YouTube viewer, and just Kerry, I'm a long-time listener, enjoy your show, and particularly interested since we started doing the show, Nick. And he has a question about a trading technique, and it's a chart pattern he's noticed and watched over the last few months on the Dow Jones on a 5-year chart. Appears to have formed what he calls a bullhorn or broadening top, which is a rare reversal formation. One of the requirements is massive public participation like we currently have in the markets, and he wants to know your thought on that formation, Nick.
Yeah, so I don't use that pattern. What I always tell everybody is the reason why I don't look at a bullhorn formation is just simply because it's not predictive of a turning point. So I want to use techniques that are predictive, or at least give me an edge. So I have to use and rely on other tools and patterns, and I think that's what he should do as well, because they'll serve you better. There is a lot of public participation. We see a lot of headlines right now with I forget the name of it, but there's one of these firms that Robinhood, yes. The free trading firms and all that. So I still pay commissions and ECN fees, so I'm not one of those. But the reality of it is, you got a lot of participation, but overwhelmingly these guys are shorting the market too, and they're getting their head chopped off. So again, when I see that, you definitely have what we call froth in the market. There's no doubt about that, and you see it in a lot of speculative names. You also see it in Hertz. Hertz is a company that's going to file for bankruptcy, but yet they're raising $1 billion in secondary offerings and debt offerings. So, I agree. You definitely have a lot of ridiculous speculation, but right. These guys are getting clipped. They're getting killed doing this, right? So just think about Hertz Rent-A-Car. They were able to raise a ton of capital, and now the stock is back down at the lows. So, basically somebody just took their money. So, you got a lot of stupid things going on in the marketplace. That is going to occur. That will happen. But it doesn't always mark a top. It doesn't always mean, you're ready for the next crash. Now, I do think over the next few months, we could be, in store for a correction or something like that. But, if you just look at yesterday, the Fed came out at 2:00 in the afternoon and said that they're going to buy, some corporate debt, and the market skyrocketed. And it's up another, 700 points on the Dow, 700 plus, 800 points this morning. So again, just watch the chart, let it tell you what to do, learn the topping patterns. I'm actually coming up with a seminar in probably the next month or so that's going to give traders an advantage and learn how to predict and watch for topping and bottoming patterns. So I think that's going to be a real hit for a lot of traders that need to know and recognize those techniques.
Yeah. And it's funny you mentioned Hertz. I was talking with John Rubino yesterday about that very same company. It's in bankruptcy. They're thinking of doing a share offering in bankruptcy. There's no law against it, but all the money they raise on that rights offering is just going to get handed over to the creditors. And it just makes no sense because, in a bankruptcy, generally equity holders are wiped out and the creditors wind up owning the company, or the equity holders are so diluted out that they might as well have been wiped out because they wind up getting like 1 cent on the dollar. And so we're definitely seeing some speculation, crazy speculation, and Robinhood seems to have really become kind of the poster child for this. Any idiot can trade for free, and it just encourages kind of recklessness, doesn't it?
I think it does. And, just to go back to the Hertz story, on June 9th, June 8th, I forget, right around that time frame, Hertz was spiking higher. The stock went from $1 to $6, and I'm getting flooded with emails from members saying, hey, is this a great buying opportunity? And, I told my membership, you could do whatever you want, but I wouldn't touch it with a 10-foot pole right now. And, now the stock is back down to $1.90 a share. So, again, got to be careful with this. The companies that I deal with are solid companies. Yeah. That's why I own companies like McDonald's. I own other companies that are solid. I own options that are solid companies. I'm not getting involved in the junk business. I'm not looking to get into the junk business or what I like to call – the trash department. I'm going to get into stocks that are solid companies, have good fundamentals, have been around a long time, and that's what I want to own or sell or, deal with. I'm not going to trade anything else. I just don't trade, garbage.
Yeah, well, for your techniques and your strategies to work, you must have a liquid market with easy entry and easy exit. And the thing is, when you're buying junk and you're buying distressed securities, sometimes the liquidity for the security will completely disappear from the market, and you could not give it away on, as I think Mink DeVille said, it couldn't give it away on Second Avenue, because sure. Nobody wants it. And McDonald's, regardless what happens to the price, there is always going to be a market for McDonald's shares here.
Yeah, and that's a great point, but you never see me talk about any of these stocks like these micro biotechs that have, doubled over the last 40 days. I just don't dabble in that stuff. It's just what I call, it's stupid speculation is what I call it. And I hate to use that word because it is a little bit negative. I try to stay positive, but the reality of it is, when you deal with these really, really bottom of the barrel type companies, if you're not smart, you got to get out on these spikes that happen. It's just like Hertz. I mean, it's a household name, but they're a bankrupt company, and that's really the bottom line. Yeah.
Yep. That is the fact. It's distressed assets, distressed securities. That's a whole different specialty, which requires an entirely different skill set than we're talking about here. It's not for traders, although it can be, but you have to beware. So what about the markets? What's going on here today?
Well, I think, we have a pretty big rally. It started overnight. It really happened in the futures market. We saw the futures up pretty sizable last night, around midnight or so. And what took place was, you have Jay Powell yesterday afternoon coming out and saying that he's going to buy corporate debt, and that really caused the markets to take off. I know a lot of the media, or most of the financial media today, it doesn't really matter which outlet you listen to, they're all saying it's up on Trump infrastructure. That really isn't going to happen this year, if it happens at all. So, I don't think that's the case at all. I think it's really we're dealing with the central bankers, and they're getting more involved, and they're doing new programs, and that's bullish for now. One day it'll be a world of pain. I don't want to say it won't be, but for now it's bullish.
Yeah, for now we're moving full steam ahead, and everything is looking good. What about the retail sales for May vis-a-vis April?
Yeah, the May retail sales number came out, and it was a blowout number. Now, whether you believe the numbers or you don't, that's entirely up to you. I personally don't even care about the numbers, but I will say when you get positive numbers like this, that does add to sentiment more bullish sentiment. And the May retail sales number was, I believe, plus 17.7% versus the estimate, which was 9%. So, this is a blowout number. And the May retail sales ex auto was 12.4% versus, the sentiment, which was 5.2%. So these are better than expected numbers. They came out this morning at around 8:30 in the morning. So that definitely helps, market sentiment, especially people that are not technical like me, that are watching the fundamentals. That gives them a better feeling to be able to go in and step into the market.
Yeah, it's definitely a mood enhancer. We should call it that. And so McDonald's were there. What's oil doing? I didn't have a chance to look at it lately.
Well, today we have spot crude up $1.50. Right now it's trading at $38.66 a barrel. It's about a 4% gain in crude. And, surprisingly enough, yesterday we had energy get hit a little bit. But today the energy stocks are all showing pretty good strength again. You have the XLE, which is the Select Spider Energy Trust, and that's up about almost 3% today. So, really it's a broad-based move so far this morning. But one thing I want to tell everybody, this is a quadruple witching options expiration on Friday. You still have to be very nimble and careful this week.
Yeah. So caution is the byword, of course. Hey, gold and silver, they recouped most, if not all, their losses yesterday afternoon. They were trading higher into the evening until the beginning of trade, I guess, on the COMEX today. Right now, silver's flat, gold's down a tiny bit, not much. What do you make of the strength that it came on at the end of the session like that?
Well, that's what gold should do. I mean, when the central bankers are in there dabbling and, basically, they're buying things with printed money or created money or digital money, whatever you want to call it. That's bullish for gold. I mean, there's only so much gold you can get out of the earth. So, yes. It's not something that can be created out of thin air. So, and that's the bullish case for gold. And the pattern on gold right now, as I've been saying every day, has just been sideways, and I love that pattern. So there'll be a point where I am back into gold and precious metals. At the moment, I really would like to see this thing consolidate even longer in the near term.
Okay, so longer consolidation's probably going to be ahead. Could be for a couple of months. It's interesting because there's a conference in Vancouver that happens every July, and the mining stocks get a bump from it. It's the Sprott Conference, and generally gold is going up that time of the year, whether it's from the conference or not, I can't say. Probably not. But this year, they're not having the conference. Personally, it's going to be a virtual conference, which just loses a lot because these are very tight. It's a very tight community of traders in precious metals, and there's a lot of luminaries in the mining sector that present at that meeting. So I wonder if it's going to screw up the cycles a little bit or change them.
I would say probably not. I don't see that happening, and I'll tell you the reason why. Markets are very, very efficient. So, you have seasonality trends in just about everything. So I would just watch that gold pattern. For me, it's always about the pattern. It's always what the chart is telling me. And right now, if you just look at, if you don't have a gold futures chart, you could just look at GLD. It's the same exact pattern. Yeah. We're really just going sideways since April, and that's very bullish.
Yeah, for sure. It went sideways for a lot of years here. It was a pretty tight channel for, up until 2019. I got a question for you, Nick, about trading, about stock prices when they trade either off their low for the session or off their high. What does that mean exactly?
Well, it's always bullish if you trade off of your low, obviously. But what you want to see in anything that you do is you want to see where it's coming from. So you really, that question's missing an equation. You have to see where the chart, where price is actually on the chart. So if you're coming from a low level, say you gap down one morning, you're coming from a low point and you reverse up. Obviously, if you close strong, that's a very, very bullish indication, and vice versa the other way. If you're coming from a high and you gap up and then you reverse down, that's a very, very bearish indication. So again, you gotta really look at that chart and know where you are. It's not so simple as, whether you finish higher or lower that day from the open.
And volume is important in those situations too?
Yeah, volume's always important. If you just go back and you look at, say, the March lows, while the volume, and I'm talking about the S&P, what you'll notice is while volume was enormous, that's indicative of a bottom forming. So you always want to see high volume at low points. Same thing when you get high volume at high points too, and you're in an extreme high. You got to be careful. If you get a high volume move there, that's also telling you that, maybe the move is exhausted and we're going to start to revert to the downside. So yeah, volume is very, very important. It's a real-time indicator, unlike oscillators or anything like that, which I barely use. Price, volume, time, and pattern. I mean, those are your real-time indicators, and that's what you have to put together on the chart.
Yeah. So when we look at where the market's heading, when we see where it's been, you're still on the side of not a bear market coming up, huh?
No, and I'll let me just explain this, because a lot of people got terrified by last Thursday's sell-off. And I said, hey, maybe we pull back a little bit. But like I said, it'll be a buying opportunity if we do. I was hoping we'd actually see more downside this week, hopefully, just to get some more entries. But the reality of it is, you're above all the moving averages on price. Price is holding up well. And that's really it. If we sell off and we start to show negative patterns, suggestions that come along, then we need to be really careful. Right now, things are still holding up well, and you're going to get, high volatility, high volume sell-offs. But this market's like the old toy, Weeble Wobbles. They wobble, but they don't fall down. And, what is the cause behind it? Probably central bank intervention. I would probably say that's a big part of it. But you also have the economy open up too, and it's getting, it's a lot better than it was pretty quickly, and that does account for something. So you have to take all of these factors and weigh them out. And the only way I know how to do it, because I'm not smart enough to do it with a pencil and pen, I have to look at the chart pattern.
You got to look at the chart patterns, and I find it fascinating because, like we've talked about before, the consensus was this market's finished, we're going to zero. And whatever the reason, they were 100% wrong. Now, I had gotten a comment on the YouTube channel, which I haven't responded to yet. Generally, they're trolls. But, I'd mentioned that I've been doing this for 9 years, and he said, well, 9 years, all the money you lost on the market going up and all this. And look, I mean, on the show, I've got people like you. I've got Martin Armstrong, who said it was going up to 42,000 or 50-something thousand. A lot of people who said the market was going higher, and it, in fact, did. So I don't know what show this person's been watching, or maybe he tuned in for one of them. Yeah, we deal a lot with gold as an insurance policy against the exact type of stupidity that we're seeing now in the central banks of the world. But that doesn't mean that you dump all your other investments and just go for the gold, right?
No, of course not. I mean, you have to, people. Well, first off, let me just say something about social media and comment boxes and all of that stuff. I don't read any of it. So the reality of it is you're giving me the questions to answer, and I'll answer them here. Yeah. But I've never looked at any of that stuff. I mean, I think, I've done probably the best I could do for people to help themselves and their family. And, and then somebody will say, you have no integrity or something like that. I think you sent me an email once where the guy said, I have no integrity. Yeah. I mean, that's completely ridiculous. And, this whole business, you don't make it this far in this business by being an idiot. And, again, you have a lot of people out there that are jealous of others. I just want to bless everybody. I just want everybody to do well in their life, and we'll have a better world. Yeah. But, the social media thing has just made people very, very negative. So, that's where I stand with that. I'm not a big social media guy. One day I guess I could take my my basketball and leave the playground and go just, work or start a hedge fund and then, make people pay through the nose. But I do this to help people. And, that's really the bottom line, because I was helped by my mentor, who was W.D. Gann. And, that's what he said to do. So other than that, that's the only reason really why I do it.
Yeah, totally agree with you. Same here, just trying to get the word out, information. I don't charge people any money, and, take it or leave it. And if you don't want it, fine, go find someone else, something else, whatever, doesn't matter. But in the meantime, we're seeing something very classic happen here, which is the majority of the participants in the market are wrong as usual.
Well, that's always going to be the case. So, there's nothing new in my book there. The one thing I'll always tell everybody is, if we're all on a cruise ship and everybody's looking over at the left side of the boat, I want to be on the right side of the boat, and vice versa. I always like it when people are contrarian to my opinion. I don't ever want anybody to agree with me. So the less people that agree with me, in my head, the more right I am.
Right. And then when you do see people start agreeing with you, then you start questioning, right?
Oh, I naturally just start running the other way. It's just how you have to be wired in this business. It's strange, but it's the opposite of every other person that's out in the public. So, when people can realize that that's the way you need to think, they'll start to make money consistently in this market. So it's just the way it is. It's nothing, personal. You just have to rewire your whole way of thinking, and that's just what it all comes down to.
So, one thing that you have to be aware of, and obviously you know it better than anyone, especially like this time, the quadruple witching hour, where all the operations are expiring, is deception. And a lot of what you hear on the news and in social media is all about deception, right?
Last option's expiration was a perfect example. I remember the day, I don't know if it was Wednesday. The options X is always on a Friday, obviously the third Friday of every month. But last time we came in, Kerry, I think we had Stan Druckenmiller. He was completely bearish on the market, and CNBC, I guess, had David Tepper on, and he was completely bearish the market. And, we had a big down day. And the first thing I said to you that day was, wow, we got a trifecta of bad news today, but this is all options X stuff. And sure enough, the following week, the markets rallied higher.
Yeah, very true. And so filtering out that noise is really difficult for the average investor, isn't it?
It's almost impossible for people that don't know. So, you created this program to have me on, and we're educating people every day. We're trying to help them. And, then you get comments from some idiot saying you have no integrity. It's just mind boggling.
Yeah. Well, there's always going to be unhappy people. There's always going to be a crank here and there, and let them have their opinions. The truth has a way of getting out. When we look back at this market, Nick, when you and I were breaking out the champagne, for ringing in 2021. How do you think we're going to look at this year?
This is going to be a year to remember. It already has been. And I think it's a year, if you don't know what you're doing, you're not going to really succeed in this market. So all the Robinhood traders out there, all the new people, I urge them to get educated on the charts ASAP, because this is not what seems like an easy environment right now because of the run and the central bank money printing. It is anything but. Even myself, who was looking a year in advance for a fall in the first quarter of the year, I never thought we would fall with the velocity that we did. And I had one bad trade in there, which was Southwest. I got caught in that trade, but I was through my knowledge, I was able to navigate it and make a profit for myself and all of my membership in that one trade, besides the rest of the trades that we've made money in, which is just about every one. But the reality, just to be frank with everybody, this is not an easy environment. It's anything but an easy environment. And if you don't know what you're doing, you'll be lured in, sucked in, just like everybody else. And, this market will break your heart.
And that's what they do. And you have to have to go through a couple cycles to really know, to really understand this lesson, right?
You have to go through. It takes years. I mean, I've been doing this since I'm a kid. I'm over 50 years old now. You're not talking to somebody that's just been, just got his Series 7, passed his Series 7 exam. I've been doing this for a long, long time. And believe me, I still see things that I'm like, wow, I can't believe that happened, and it's just really incredible. But you're always learning in this business. I always tell my membership, I'm forever a student too. I'm always learning, but I probably have made every mistake that you could possibly make, and now I don't make those mistakes. So that's really the difference maker.
Yeah. Well, learning from your mistakes. And look, you're in the market, so you're going to be making a lot of them. And the key is, I guess, money management, just to make sure that you're able to recover from a mistake and learn from it. Because some of them are really painful, aren't they?
Oh, I mean, this business, just think about, I always take that example of SPCE, and just think about the guy that heard the story in February and he bought the stock at $42, right?
Yeah.
And now, here it is today, at $15 equity. Just think about that. Somebody bought that up there, and because they didn't know what they were doing.
Yep. Yeah, just like at the end of every bull market and whatever it is, there's always somebody that paid the highest price. There's people out there sitting with $1,950 gold waiting for it to go higher, $4,950 silver waiting to get their money back on that. And, I guess there's a lesson there about taking losses too.
Yeah, and yesterday the last few broadcasts that we've done, we've talked about lessons that you need to learn, and I always tell people use that 10% rule. It's a really good rule. Great legendary traders. That's where I adopted it from. Jesse Livermore, William Delbert Gann. This is where I got this rule from. It's not a rule of fiction. It's a rule of fact. It will help save you.
Yeah, and one good thing about that 10% rule is hopefully your profits, your trading is successful. You'll build up your account, and then the amount of that 10% is gonna get larger and larger. Hopefully, if you're doing things right.
That's the idea. It'll compound, and that's ultimately the idea. The problem is, a lot of people can't make it to that success point. And that's what happens, So again, if you just do things right, you have a strategy, you follow the rules, you're going to be fine. If you break the rules, hey, that's when you're going to get hurt, and that's when people do.
Yep. Well, hey, Nick, interesting times ahead. Appreciate, as always, having our time together to go do this show and to help others. If you got any questions, you want to look at Nick's trading record, just go to inthemoneystocks.com. The Twitter feeds are at ITMS and at Nick Santiago 01 and at Kerry Lutz. And we welcome your questions. We will answer them on air, as you've heard. Just send an email to kl@kerrylutz.com. You can put a question up on the YouTube or other platform. I may or may not see it. So the best way, email me, kl@kerrylutz.com. And Nick, we will pick up tomorrow.
Yeah, sounds good, Kerry. Thank you.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.